Welcome to our first look at the new tax law. This presentation is intended for our volunteers, for our customers and partners, and we're very grateful that you are with us today. I'm Ed Leahy, the Coalition Director for the Omaha EITC. As we get into the presentation, a few disclaimers and recognitions. First, this session is recorded and is an open public forum. Therefore, please do not ask personal tax questions in person or through the chat. We will not answer personal questions during the presentation. Feel free to schedule an appointment to talk about your situation at another time, and our contact info is at the end. The recent changes in the tax law are still undergoing regulation writing at this time and are subject to change. There are numerous court cases challenging some aspects of this law, some amended proposals before Congress, and other factors that still could significantly change this law before the end of the year. At this point, there likely will be a delay to filing season as the rules are finalized and the software is written. So just be aware of that, though you'll see when we are anticipating beginning, and we anticipate being able to serve people even if we can't quite transmit your returns on the very first day or so. The opinions expressed here are the best that the Omaha EITC could develop with what is known at this time. So again, if this isn't tax advice, this is a look at what we believe is happening. And we acknowledge that some information in this presentation comes from other VITA organizations, professional accounting organizations, and legal entities. We're grateful to reassemble some of the information to better inform our constituents. And thank you for that support as we went along. A very little bit about us. We are a mission-driven organization, ideally to financially empower our customers, help them develop assets, be better connected in the community, especially receive quality volunteer tax preparation, and to develop strategies to improve savings as a means of approaching that financial empowerment. The coalition's work in general is divided into four principal areas: gathering the coalition together, of course, which is an organization of organizations that evaluates the program effectiveness, manages subcommittees, promotes financial stability, and adds to our vision and strategies for poverty reduction. Of course, a big part of our work is tax assistance, which is a full program through the VITA program, and we are open year-round doing postseason filing and compliance for late filing and extensions, prior years, amendments, etc. We also do facilitate newcomers to renew or apply for individual taxpayer identification numbers, or ITINs. Together with that financial assistance, we look at financial education. Our training program trains and helps certify volunteers through the IRS for tax preparation. We offer community seminars and presentations. We have an intern program and an available financial coaching program. And within that, we want some end results for people. So we offer direct deposit products. We offer a variety of other services through what's called our money menu. We do intra-agency cross referrals between the various programs of Family Housing Advisory Services, as well as other community programs. And we advocate for policies that support the working poor or the hardworking people that we all are. There's some important tax information, and we like to say the more you know, the easier it will be regarding our new tax law. First, there's a timeline of the bill known as the OBBA, which is I can't even say the name of it. Big Beautiful Bill Act, One Big Beautiful Bill Act, signed into law July 4th of 2025. It extends many of the provisions of the tax law we had from 2018 through 2025, but it contains many impacts to safety net programs and dramatically increased immigration enforcement by over $126 billion. With over half of the year already expired, citizen taxpayers will face new immediate impacts with some anticipated benefits, especially in the first year. But non-citizens, especially those working through the broken immigration system, will face increased exclusions from traditional tax credits they were previously eligible for. And on the left side of the screen is the timeline. There are provisions of this bill that don't take effect until 2026, 2027. There are some that expire in 2027, 2028, and new things. But overall, we'll see in the various provisions of the law just what some of those impacts are as we move through it. First, for this current tax year, 2025, these are the standard deduction amounts that will be available for filers. So if I am single, I will be able to deduct 15,750. Married joint is double that. And qualified surviving spouse is like married joint, and head of household comes in a medium range in between married and single. So with that, that also is the line that you would have to exceed were you to be able to quote unquote itemize your deductions, which means that you're claiming more individual expenses through taxes paid, mortgage interest, charitable contributions, and a few other incidentals, including medical bills with certain limitations to be able to claim that. However, if you are over age 65, there is an additional deduction to your standard deduction. If you're married, it would be an additional $7,600 for each taxpayer, taxpayer and spouse. If you're single, it's $8,000 if you're 65 or older. And these additions will run 2025 through 2028. They are indexed to inflation, and there may be minor adjustments, but that's the provision of the law to this point. We'll hear about this later. There is an existing annual additional deduction of $6,000 if your Social Security becomes taxable. But we'll talk about that a little later in the presentation. There are other situations when you must file if your income is below those standard deductions. And I'm not going to painstakingly go through this, but all materials for this are available on the link in the chat room. And if anybody in person would like a clearer presentation of this, we can reprint that for you after this session is over. So just to handpick a few here, if you have net earnings from self-employment of at least $400, you must file a tax return. So you're not going to face income tax, but it's one of those mandatory obligations. If you had advance payments of the premium credit for the marketplace insurance, you also must file a tax return. In most cases, it's advisable for people to file anyways, because you may be eligible for credits even if your income is low. And we are always happy to evaluate for individuals whether they need to file or should file. This is one of the first areas of controversy in the new bill, some changes to the child tax credit. This year, the credit amount expanded to $2,200 for the non-refundable portion of the credit, meaning to help reduce or eliminate your income tax after those standard deductions. The refundable portion, meaning what goes back into your refund, is determined in part of how much of the credit did you use initially, or 15% of your earned income less a certain amount. And our tax preparer certainly will educate and explain that credit to filers when they come in. However, the biggest change is that a Social Security number is now required to even claim the child tax credit. The question, as regulations are still written, is it only one social for the taxpayer and or spouse that opens that door, or do each need to have it? So we'll wait for the dust to finally settle on that, but it is beginning to look more like each primary taxpayer must have a Social Security number. Certainly, each dependent child under age 17 will need to have a Social Security number to claim that credit. Otherwise, they potentially could be eligible for the qualifying dependent or other dependent credit, which is a $500 credit that would help to reduce income tax. Now, again, there will be some finalization of these rules and clarity to come, but this is going to be a theme that we're going to see throughout, that you must have a Social Security number to benefit from many of the credits throughout. We do recommend to people, and there is a guide of how to set up your ID.me account in the materials. Establishing this account through irs.gov will mean that you have to upload a photo ID, your Social Security card, a selfie without any mask or eyeglasses on, and two other forms of address confirmation, such as a utility bill or insurance bill with your name and address on it. All forms must be valid and have the current info of the taxpayer. Your credit is checked for further confirmation, but as an educational hit, meaning that it does not count against your credit score. However, when you do establish this account, you have access to your payment plans if you have one, to any account balance you may have, to your identity protection PIN number, or transcripts, and more. And welcome to the digital age. Having an online account is very convenient if you are missing some information or need your transcript and filing a previous year, or unsure exactly how many jobs did you have in the year, etc. For individuals who do not have Social Security numbers, they can apply for and receive what's called an individual taxpayer identification number. Applications for new ITINs require filing a tax return for the current year. So that must be done in conjunction with filing. This is not the time of year in September to be applying for a new ITIN, because that process will take several months at this point to be complete. Renewing an ITIN number, which was established in 2014 that all ITIN numbers expire in a 5-year period and must be renewed, not changing your identification number, but renewing it, because there was no way to account for anybody who had adjusted their immigration status, who had died, who had perhaps left the country and no longer needed to file a U.S. tax return. Will also now require filing with a tax return. The IRS has been under pressure to share ITIN information with the Department of Homeland Security, Immigration and Customs Enforcement, or ICE, but to date, no real formal agreement has been signed, and that is in part why we have had 7 directors of the IRS over as many months in this year. Our recommendation at this point is, unless you have an active adjustment of status case as an immigrant, waiting your court date, moving through the final stages of our immigration system, you may want to consider the risk of applying for or renewing an ITIN at this time, because that is a paper burden process where you have to submit your documentation and you may be exposed to other consequences. You also may want to, if you decide not to file, to reduce your withholdings if you are working, even though you're not authorized to work, so that you're not losing money that you would otherwise expect to claim if you are filing the tax return. ITIN users are not eligible for earned income credit, child tax credit, or education credits under this new law. So previously, people were eligible for child tax credit and education credits, but now that doorway has been closed. The Department of Homeland Security and ICE and the State Department has additionally canceled the status of many newcomers, refugees, asylum seekers, people under temporary protective status, and select other visa holders. And if you still have a Social Security number provided to you in association with that status, which may have been canceled, we recommend that you do file anyways, as though your status has not changed. Many of these summary cancellations are under review and court challenge, and there's no final determination on that. Moreover, we do not have the capacity to determine if your social is still valid or not and what you can do. So approaching life in that best way is what we recommend. The education credits largely have not changed. There are 2 of them. The lifetime learning credit is available for up to a $2,000 credit, or a maximum rate of 20% of your qualified expenses. It does not require you to be enrolled in a formal program of study, but if you continue taking college eligible courses at an eligible institution, this credit can help you to improve your job skills, etc. The American Opportunity Credit is a bit more generous. It's for the first 4 years of post-secondary education, up to $2,500 to reduce your income tax as a non-refundable credit, and up to 40% of your eligible expenses is refundable or put in your refund. It's available only for the first 4 years per eligible student after the high school. And students must be pursuing a degree program or other recognized educational credentials. Now, there are a couple other things. The student must not have been convicted of possession or distribution of a controlled substance. So that's a question that must be asked of anybody claiming that credit. And the most important addition is, once again, our refrain, let's hear the church say it, a valid Social Security number is now required to claim these credits. Many changes in this law affect student loan repayments. And this is one of those timeline indicated rollouts within the new law. So at the moment, there's no real change. Your student loan interest is still deductible. You probably have to repay your student loans to get that interest that is deductible, and that many people are being re-engaged in their payment plans. What's important is making decisions if you are on an income-based repayment plan. That has to begin, you have to finalize your decisions by July 1st of 2026. And overall, many of us who are repaying student loans will find that their repayment monthly rates will increase by $300 to $500. So there is some budgetary considerations that must be made. This is explained in greater detail in a handout available to people participating in this webinar. The changes for this tax year that are garnering a lot of attention, and some of that attention is based in myths. So it's very important that taxpayers look for sources of trusted, accurate information, not what you're hearing on TikTok, reading on a variety of other platforms, or on the quote unquote internet. Um, there are reduced taxes on overtime. Single taxpayers will be allowed to deduct the first $12,500 of income earned from overtime. If you're filing a married filing joint return, that number increases to $25,000. The deduction, however, is only for earnings above the normal pay rate. For example, the half portion of time and a half compensation. And that must be documented. Now, there is a phase out of very high income, which is not what we generally serve, so I'm not going to dwell on that. But you will need that documentation of what is your half time pay. And that is unclear how that will be related. A new box on the W-2, perhaps, a clarifying statement on your final pay stub of the year. These are the things that are changing. And let the church say it, Social Security number is required to claim this non-taxable income on overtime pay. Together with that, a very other popular and myth-driven thing is that your taxes will be reduced on tip income. Taxpayers will be allowed to deduct the first $25,000 in income earned from customary tips. And in the last few weeks, IRS published a long list of employers or roles that people may deduct their tip income from. This only applies to federal income tax, that should be noted. And workers will still owe payroll taxes such as Social Security and Medicare payments. Again, the deduction phases out for income higher than we normally serve, and documentation will be needed, meaning that if those tips aren't claimed, you must claim them and pay the additional tax on it to get the tax break of the 25,000 from your income, but you're still going to have to pay additional tax on it. So it's really not entirely free and like you're getting a huge break. And this deduction is only authorized through tax year 2028. And let the church say it.
Social Security required.
There we are. So that's, and some people might be saying, well, that's not a bad thing, except that with pulling this all together, this affects a lot of families in a lot of communities across the country and here in particular. This is a pay stub from one of our customer servers who was grateful enough to share that with us, and we blocked out personal information on it. And it's a kind of confusing thing to read. I wish I could blow this up better, but the first lines indicate the taxpayer's rate of pay, for what is earned at the job is $3.5 an hour. The tip income that was generated on a regular basis was 2,264. And this was as of July this year. The direct tips that were offered by customers, perhaps through credit card payments, etc., was $11,000. So making a decent buck, hard work, serving the drinks, the food, clearing the table, being at every beck and call, smiling and enjoying retail work in so many ways. And then there is an overtime payment and tips on the overtime of only $16 that was there. And then, of course, there's withholding for both federal and state taxes. Not quite sure how that's going to translate into something that the tax preparers will do or document or need to confirm. Question in the audience here?
So is that allocated tips on there anyplace?
Not on the pay stub as far as I could tell. It'll be interesting to see the W-2. And I did not ask the taxpayer for a previous year W-2 to make comparisons. But we are going to need to look for that documentation, and we'll need to confirm, of course, that they have a Social Security number. So again, I don't want to dwell too much in it. It's just there's stuff still to be figured out is really all I'm saying before this becomes practically applied. And I suspect, in all honesty, many of us will be huddling around our first customers and seeing, oh, that's how it works, or this is how, and reading error messages or etc. And I say that not just to be flippant, but in practical reality, this is new. We're not quite sure where this will be played out in the return as an adjustment to income on the itemized deduction line, and what happens if you can't itemize, and what happens if your tip income isn't that much. You don't get 25,000, you get your tip income up to $25,000 reduced. So that might help people. And we'll see what the final regulations look like. But there's been a whirlwind of commentary, questions, TikToks and others about this as a huge win. And it will benefit some people, especially in the first year, and especially as with most new regulations, okay, well, we'll accept this, or we won't go after you for that to claw back yet, or other things. So there may be some quote unquote benefit to customers. Couple of other interesting and less attention grabbing things is you can now deduct your car loan interest up to $10,000 a year for new cars whose final assembly took place in the United States. So not a foreign made car, but it could be a foreign brand car that was assembled here in the US. So maybe a question to ask your dealer if you are considering a new car. And this begins with purchases made in 2025, and that will last until 2028. I remember when my parents deducted car interest way back in the day. Had I known this was going to be a part of it, I might have been tempted to get a new car this year. American, of course. There will be changes to electric vehicles. The deduction for electric vehicles is going to end, but they could potentially still qualify if that particular electric vehicle meets all of the requirements. Additionally, very popular and one that generated a lot of customer concern, the senior tax deduction on taxable portions of Social Security. So if you are retired receiving your Social Security benefits, or you're disabled and receiving Social Security benefits, and if you are still working or your spouse is still working and total family income exceeds lines. In the past, it was 15,000 singular, 32,000 if you were married, before portions up to 85% of your Social Security became taxable to you. That will still happen. So you're going to face taxable Social Security. But if you're over 65 age, you will receive an additional $6,000 deduction prior to the standing deductions that happen for single or joint filers in that age. This will primarily benefit upper middle class seniors due to deductions already present for them. It won't affect a number of our low income filers who often don't trigger that as a burden, but it was enough when the government is messing, quote unquote, with my Social Security that caused a lot of anxiety for our older taxpayers. And I remember one gentleman came in with a ream of paper that he had printed from a variety of sites with conflicting information. And, it's that level of concern that we want to address by saying, we don't think it'll be that bad. It will benefit some of us. But in other cases, we'll see how that practically plays out. There are a few other credit changes worthy of note here, and that includes an enhanced dependent care credits. This year, they will go up to 50% of eligible expenses, but in the current filing year, it's still going to be 35%, as I understand. So beginning in 2026, that will help a bit. That will be reduced as income goes up, as you can read there. And the credit will never go below 35%, except in this current filing year, it will only be, can't go lower than 20% of your eligible expenses for dependent care. The deduction for charitable contributions, much as we had seen in the pandemic years, there was a concession to claim an adjustment to income for some charity that you had made, even if you can't itemize with those expanded standard deductions. Now will be allowable up to $1,000 single, $2,000 married filing joint, to help as an adjustment income to lower your income before tax. For those that are itemizing, there has been no real change. Your deductions have to be greater than 5% of your adjusted gross income. to really count. And this deduction is authorized permanently, unless there's another change that says that's not really permanent. But for now, you can kind of count on that. As a nonprofit organization, I can tell you this is very helpful as really charitable contributions have declined since 2018. And so this will encourage some people to still be generous with those qualified organizations and be able to claim something that will give you a little tax benefit. The state and local income tax deductions currently have been capped at $10,000 when you are itemizing, and that includes your property taxes, your state and local income taxes. That limit will increase to $40,000. So that's often helpful, as I just got my notice that my property taxes have increased again. So, but that $10,000 cap will be reverted to in 2030. So in a few more years. So again, one of the things in educating taxpayers has been, this is what you should keep track of. This is what you want to assemble prior to coming. This is the expenses at hand for you. And with all of this in and out, accepted until this year and that creates greater confusion and adds to it. Another question here in the audience.
On the charitable contributions, are there any changes to the acceptable charitable?
Not that I'm aware of at this point. So generally, you know, the 501c3 nonprofit church, etc.
Okay.
Save the whales. Okay. There's a few incentives in the new tax law. One of them is the quote unquote Trump account. This is similar to a non-deductible IRA contribution, but reserved for children. It is fundable by the taxpayer or anybody else up to $5,000 a year, and the contributions can be made by any quote unquote taxable entity until the age of 18 for the child, when it converts simply to a traditional IRA account. So promoting childhood savings is a very good thing. This is an opportunity. One of the unique things is if your child was born between January 1st, 2025 and December 31st, 2028, you could receive $1,000 in seed money from the federal government. I have not seen anything on how to apply for that, how that's indicated. Is there going to be a special box on your birth certificate or some other thing? And again, you know, if you're eligible to claim this, saving for your children's future is a good thing to do. So some people may want to consider that. Not for children born before 2025, however. For health savings accounts, there are a variety of plans that are now more eligible for health savings accounts. There are deductions available for families for direct primary care, and this includes a permanent extension for any telehealth services, which have become more popular as our medical professions are also facing a shortage of personnel, and just Caesar, don't come in and see me. Let's just pop on the TV. Yep, it looks like you have some sort of disease, so take this pill. Thank you. I'm not denigrating telehealth, but as an active participant in the healthcare system, I can tell you there's lots of noticeable changes that leave people with questions, difficulties, and gaps. And guess what? It is more expensive. than it has been before. Regarding Plan 529 or college savings plans, there is an expanded use for it to include testing fees, tutoring outside of the home, and educational therapies for those with disabilities. These tax-free withdrawals also will be recognized for post-secondary credential programs. So not a lot of change there. A 529 plan is still a solid investment for your dependent children. One of the things our economy is facing, and one of the myths that I would like to challenge about the new law, is tariffs are great, and if they continue to prove their success, we won't need income tax or the IRS anymore. That's not entirely true, because there's a number of other benefits that are funded by the government, by our taxes, that create that social safety net for our community. And while I don't have children, I've never minded paying taxes to give families with children a hand up and a greater opportunity for stability. The Federal Reserve Bank of New York recently identified in August of 2025 that non-housing debt, auto loans, credit cards, student loans that are now back on the taxpayer's responsibility, grew by over 45 billion, or really 1%, in just the second quarter alone of this year. The total household debt increased by 185 billion in the second quarter, to now a total of rising over 149 billion dollars. Household debt are mortgage balances and home equity lines of credit. And so in the blue field, that's the housing debt that has gone up previous to this year. The pink field indicates the non-housing debt increases. It's generally about 41% more expensive for people to qualify to be a home owner initially right now. And that is a dramatic increase over the last 2 years. That means that on an average salary in Nebraska, you have to be earning in excess of about 108,000 a year to minimally qualify to apply for a mortgage. The average salary in our region here is still about $60,000 a year. So this is creating a gap, and we are likely to see more foreclosures in the coming year or years. We've seen property taxes continue to increase, and other stressors for families dealing with debt. And that burden will impact as we realize how much else is no longer available from your taxes. This will affect energy credits as well. So energy efficient improvements and residential clean energy credits will not be allowed for any property or expenditures after December 31st of 2025. These are the common credits claimed by homeowners amongst our customer base. And there's more specifications that apply to higher income, but I avoided putting that in here. Making these improvements may still likely be a good thing to do. It's just that you won't count on that credit, which had been reduced since the pandemic years anyways. So be aware of the marketing in the community around this for new windows or new heaters or things like that. There's just going to be less available assistance.
So that is still at 500 per
3 years.
Yes, and there's a little variation among certain of the products. Again, we'll huddle around the computer for the first person that needs to do that to see how much it is, but it's not going to be with us after this year. There are a number of state issues confronting us. State returns really don't go into production until the federal return is settled. And that may be a contributing factor to potential delays in filing season. States will lose out on revenue through many of the cuts in this law. And Nebraska is expected to have a $400 million short fund over the next 2 years. So the pinch is on locally. Be aware of various housing credits that are available in Nebraska. The homestead exemption for homeowners or disabled or veterans over 65 that can reduce or eliminate state property taxes based on income and medical expenses. There is also an Iowa homestead exemption, and both of those are available in our software as we help taxpayers apply for them. The blighted home credit has been extended through 2032, I believe. It is a $5,000 non-refundable credit meant to reduce your state income tax, and that amount is reduced by how much a taxpayer claims year by year since it first was established in 2020. It must be in an area designated by the city of Omaha, and usually the taxpayer receives a letter, "Congratulations, you live in a blighted area." The taxpayer will need to know their date of purchase, the name of the seller, and how much credit was used in previous years to properly figure the credit for now and avoid love letters from the Department of Revenue. But those things are still there, and we are awaiting further state information in the fall yet. There are other impacts to the safety net in this law. States must now pick up additional administrative costs for SNAP, the Supplemental Nutritional Assistance Program, or food stamps. I don't know how many years we have to keep saying food stamps. But that is projected to add 13 million to Nebraska's administrative costs. States will now share the cost of those benefits that families receive. There are expanded work requirements for anybody receiving food assistance, and it eliminates eligibility for certain immigrant categories. We can sing the song again. You must now have a social. It impacts free and reduced price for school meal accesses as well. So the full impact of this is not quite known, but it is going to be certainly harder for people who depend on that essential service. There are a number of impacts to medical care and health care. Medicaid has voter approved cuts and increased work requirements, copays, and more frequent redeterminations, meaning you're kicked off the roll, must reapply, present all of the paperwork, everybody who lives in your home, every source of income that they have, etc. And that has been a burden in the last 2 years, as we've seen people have their benefits suspended until they were able to successfully be redetermined. Certain immigrants, including children, will lose coverage under Medicaid, making their costs for healthcare more difficult and more expensive. And this will affect many of the community clinics in our area that serve people as well. It cuts retroactive coverage, meaning that I got redetermined and I could backtrack over that. Nope, it's from redetermination onward. Bans providers like Planned Parenthood from Medicaid reimbursements, and has greater limits on the tax provisions that a provider could claim.
Also.
Yeah. For the federal marketplace, the Affordable Care Act insurance, it makes it more difficult for people to enroll, and that begins in a month or so. There is no extension of the premium tax credits beyond the current year. So anybody who has ACA insurance will be paying the full price for their health coverage, as that support will end, and there's expected increases in premiums for this coming year. Everyone in this area will experience the impacts as health is challenged and things become more expensive. The Medicaid work requirements now for recipients 19 to 64 will require 80 hours per month or fulfill similar criteria such as job training, community service by 2027. Those are rolling out, they're not immediately effective. States may act sooner, and so far Nebraska has not, as I understand it. I don't believe Iowa has either in the immediate future, though there are numerous exceptions that are being considered. If you're pregnant, disabled, or you're caring for children under age 13, or you're disabled, well, then you might not have to work 80 hours a week, but you probably have to document that pretty well. Co-pays may increase for those who are earning more than $15,500 a year, and federal Medicaid expenditures are projected to drop by $84 billion a year as enrollment grows to approximately 80 million by 2034. So that's going to increase pressure on lower income families and their budgets and navigating these changes. On our website at omahaeitc.org, and we have not updated this for the current year yet because we haven't seen a lot besides these few prescriptions. I just want to point out that it is available to look at, and let me switch my screen over here to avoid heavy duty interference and more data. If you scroll to the bottom of our homepage, or I'm sorry, in the tax information tile is where you will find the opportunity to engage with the interactive 1040. This feature allows people to click on a blue dot throughout the tax return to understand certain definitions there, such as dependents. It will explain that, and there's an opportunity to play a game to understand the rules of dependency. So it's a feature that will take you through everything, and when certain income appears on a different schedule, that's your total income, and that will come from the Schedule 1. I wanted to trigger showing the Schedule 1. You can actually click on the adjustments that may be available, understand those definitions, and see how the return unfolds. So this is our attempt to provide community education for our customer base. And give me 1 sec to see, I have to move my taskbar to get rid of this. So so that we can put that off to the side again. But we do encourage you to visit and at least initially check out the interactive 1040 to learn a few more things, and we applaud all of that work. It is my pleasure now to, or is it, I'm a little early. Sorry, a lot to get through. Are there any questions at this point for either online or people joining us here in person? And I just want to pause. And Liz is keeping track of the chat box. No other questions at this point? Okay, great. Then we'll continue on. Let me get rid of my taskbar again. Thank you. So what does this all mean? Well, our system has always been pay as you earn. Now, that isn't essentially changing. This is the tried and true. And I remember my father would take over the kitchen table or the dining room table for months at a time, which meant we got to eat in the living room as he sorted and assembled all his facts and figures. It's still very important for taxpayers to have appropriate withholding through their job, on their retirement, in Social Security, if you've traditionally faced taxable portions of that, and on your gambling winnings. Pay estimated taxes if you are self-employed, especially if you end up owing $1,000 or more in the most tax years. Those are good things to keep you from facing increased tax debt. Know your resources, your sources of income, and how certain limits could impact your overall taxable situation. Well, I'm still working, but my spouse is retired and he or she is collecting Social Security and I'm earning this, and how is that going to impact us? That's where the interactive 1040 can also help you at least get a sense of how some of that may play out. Please don't believe everything you read online, in TikTok, or hear from a politician. And that's not a general slam. Political figures reduce it to little talking points that make them look good. That's traditional politics, and God bless them for it. But don't trust it because they often don't understand the impacts that their talking points make when it comes down to all of the rules in the tax code. Always consult a tax advisor. You know, don't just look for that info online. Certainly, we must all still endeavor to keep our information safe. Don't leave documents in your car willy-nilly all over your house. Have a place that you go to organize and keep those private and out of prying little hands or eyes of visitors or easily accessible by a burglar. And it's still a very good idea to check your credit report at least once a year, but you are entitled to pull your credit report from each of the reporting bureaus once a year. So you could do that every quarter of the year. Those things haven't changed. This is where we're coming to the presentation. I'm going to invite Ginny, the Associate Director of the Coalition, to walk us through this next section. Thank you.
So when you're preparing to come in for your appointment or to get your taxes done, being organized and having all of the information necessary is really going to help you out to make sure that you have an accurate return prepared. and help you only have to come visit once to get your taxes done instead of maybe having to schedule a return visit because we were missing some information. So that's going to include things like your social security cards, your photo IDs. It's very helpful to have last year's return. It's not always necessary, but if there's ever a question about, did you have something or not? Does this show up regularly? We can refer back to it, especially if you have a question about why did I get a refund last year and this year I owe. We can kind of compare the 2 years and see what that difference, where it's coming from. Any of your things that you want to itemize, we don't necessarily have to have your receipts for things like charitable contributions, but you need to maintain those records so that if the IRS ever comes knocking on your door, wanting verification of that, you're able to produce it.
How long do they need to keep those?
So tax records should be kept for a minimum of 3 years. If you're doing self-employment, I would recommend more like 7 years. But you don't need to keep your tax records forever. I know when I was helping my parents go through things, they had 30-year-old tax records. You don't need those. But anytime you are going to dispose of an old tax record, make sure it's being shredded or burned. Not that you're just throwing it in a trash, because a tax return basically has everything on there that somebody needs to steal your identity. When you come into an appointment, it's very helpful to have your email and password ready, because if you have forgotten something and you need to look it up, invariably those send a confirmation email to your email. So being able to get into your email, knowing how to upload or download documents is very helpful. If you have online banking, know how to use it, or have your bank account routing number and account number available so that you can set up your direct deposit or direct debit. We have heard that this year will no longer be paper checks. That is, they are saying now that's over. They've been threatening for years and now they're saying it's a done deal. There will be no paper checks. So have your bank information ready. If you do not have a bank account or you forget it, we are able to set you up with a debit card at this point that's still available so that you could have your deposit put on this debit card and use it like an ATM card, debit card at stores. But otherwise, you're going to have banking information if you are receiving a refund. Use antivirus protections on your computers and your phones. Most of us use our phones now like computers. So you want to make sure that that's a secure, safe place as well. Keep your documents safe. And you can always check our website at the, having your tax questions answered, to take a look at frequently asked questions and other things that may help you out to be prepared. So we like to talk about our customers having money instead of saving money, because a lot of people struggle with saving. And then once they have savings, they don't like to spend them, even when they should, because that's savings. But if you have money for when you need it, it's available for those needs that come up, emergencies, whatever they are. But you're not fixed in this mindset of you're never supposed to touch it, because that's the purpose of having money, is being able to use it when you do face that need. So we really kind of walk through this as we are working with a tax return and a customer to talk about what is your income, what are your expenses, what's the difference. Hopefully it's a positive difference and your income is greater than your expenses. But what can you do to help maintain that having money, that savings money? And if you have spent it, how you can work on rebuilding it. And tax time is a great time to kind of look at those things. Quite often you might be getting a larger infusion of cash. And so what to do with that to help your overall financial situation. If you're not, how do you adjust your withholdings at your job so that you maybe would have a refund or break even instead of having to pay a large amount all at once? So that's kind of an opportunity of doing a little mini financial coaching and then seeing if somebody needs something a little more in depth to help them out If it's more than a minor adjustment that they might need, we can always refer them into a counseling program. So how do we get to help you? Well, we can set up appointments. We do in-person appointments. We also have remote filing. And of course, you can always seek out another preparer. Just make sure they're a qualified preparer. This is what our hours were pretty much last year. They will probably be similar this year, but they have not been finalized. We try and finalize that throughout the end of the year and set our calendaring up in December. Our calendar will not open for scheduling those appointments until that first week of January. So you could go on our website at that first week of January and start making an appointment. I would encourage people to just remember that some of your documents do not come out until later. And this year, it may be even later than usual if they're having to be making changes to W-2s to reflect overtime and tips and what may or may not be deductible. So schedule your appointment for when you can be fairly sure you will already have all of your documents. If you are self-employed, make sure that you are going through all of your things and have all of your income and expenses together before you have that appointment. Okay, so just make sure you are prepared. You can always set your appointment in January for a March appointment date if you expect to have it take a little longer to get all of your things together. So to make an appointment, you can go to our website. You will see a little box, usually very close to the top of our website, that's going to have the option for the in-person appointment or for our Tax 360 secure drop, which I'll talk about in a little bit. So you would click on that in-person appointment. At this time, we are only making appointments by calling our office. So if you click on that right now, you get a phone number. That message is a little different up there. It says to call us if you want an in-person appointment. But that's where you would click. And then you're going to get to a form to fill out that's going to ask you a few questions. This is to make sure that we will be able to assist you at whatever site you go to. And that is by saying you need to be filing the most recent refundable years. You need to be a US citizen, permanent resident, or lived in the US at least 5 years. That's what allows you to file a regular 1040 and not a non-resident 1040. Our agency does not do non-resident returns. So if you click on that "No, I'm a foreign student" box, it will direct you and say, we are not able to assist you at our tax sites. Because we don't want you, waiting and showing up, and then we get to talking to you and realize we're not able to provide that service for you. You're then going to select where you want to have your appointment, and all of our locations that are available will be listed there. At that time, we will also try and have time frames that show when those are available. So if you know I can only come on a Monday, you can pick which sites are open on Mondays. But once you click that and click submit, you will be taken to that calendaring system for that particular location. And that's where you're going to enter your name and your phone number. If you put in an email, you will get an email confirmation of your appointment. And then you can select what years you need to file and what language you are requesting. We cannot guarantee that you would have a Spanish speaker, but we always do our best. And if you speak another language, we do have other options for trying to assist with that translation as needed. Then you're going to just pick out your time. Okay, there'll be a calendar that you can flip through for the months and look for the times. If a time is not shown or it is grayed out, then that time is not available. We have had people call us and say, your calendar is broken because there's no times available on this day. It's not broken, it's full. And so if there's not something available, you're going to have to pick a different day because that one is full. Then you're going to get a confirmation screen that's going to tell you when your appointment is and where. You can always take a screenshot of that or print that out. I recommend that you do that, particularly if you did not put an email in, so that you have that confirmation of your appointment and remember when it is. Because if people try and call us a lot to get confirmation of like, oh, I forgot, when's my appointment? It's very hard for us to get to the phone in tax season. So we may not be able to get back to you within a time frame that helps you make it to your appointment. So please screenshot this. And please use an email that you actually check if you want to get that email confirmation. Forward that email. If you don't see it, please look in your spam folder or your junk folder. It's pretty common for ours to get shunted into that for some reason. So double check that before you call us and say, I didn't get my confirmation email. Look in that folder first. This email may look a little bit different because this is our old appointment system, but you will get an opportunity to change or cancel your appointment through that as well. If it's not working for you, make sure your computer allows pop-ups. Change your browser. Sometimes different browsers will have different things blocked. And so if you're stuck in a loop or nothing is happening, try switching to a different browser. Like if you're using Chrome, switch to Edge or vice versa. Always check your security settings. And as I said, if an appointment time is grayed out or missing, it means it's simply not available. So one of our other services that we offer is Tax 360 Secure Drop. So this is a remote filing option. We still file and prepare those returns for you. It's not a self-assistance where you're getting on there and entering all the information yourself. It's still done by people. It's usually still done by me, actually. So I'm usually the one who's handling that. Go to our website, and where you saw those two boxes, one for in-person and one for secure drop, you're going to choose secure drop. Then you're going to have a document. I encourage you to read through it entirely before clicking to actually sign up, because that's going to help make this process actually work for you. You'll start off with the guest exchange, entering the information if it is your first time ever using secure drop. If you're returning, you can just log in using your credentials you had from the prior year. Everything carries over year to year on this system. We do have videos on our YouTube channel that walk you through how to use this. So if you're a little confused, need a little more information, you can look there. This is really a system for somebody who is pretty comfortable using the computer, is comfortable uploading documents and downloading documents, and corresponding through a chat feature that is available through this system. You can access it on your phone, on your PC. It's wherever you feel most comfortable. So you can do it in your PJs at home, but that you can upload pictures, Word documents, PDFs, whatever you have to that system, they all work. So you can take a picture of your W-2 and upload it, and that is perfectly fine. It will usually in the late fall, early winters, when kind of all of our tax service shuts down, when the IRS is no longer accepting electronic returns, and then it'll start back up again in January. So it's still active right now. We are still doing things through there, but later in the year, our process is kind of shut down and reopen in January for everybody, so we can electronically file.
Great. Any questions for Ginny?
Yes.
If you have more than 1 year, can you go in twice, or how do you do that?
You can do multiple years through Secure Drop, but if you're signing up as that new customer, there is a box where you can put comments, and that's where you would put filing for 23, 24, and 25. That's very helpful if somebody has multiple years to put that all in there, so that we kind of know what we're working with and make sure we have everything that we need. Any other questions about making an appointment or the Secure Drop system?
Great, thank you, Ginny. And now to continue our show, I'm inviting Elizabeth Torres, who's our volunteer manager, to walk us through yet other ways that you can help and opportunities that are available.
Right, so our tax preparer courses have already started last week. But if you or anybody else that wants to volunteer with us, we do have other roles available for you. Our next one that we are going to be doing is a site navigator trainings and orientations. Our orientations do start in December with the trainings starting in January. This information is available on our website at omahaeitc.org. You will be able to sign up for those orientations there on the Be a Volunteer button. This flyer is also going to be available on our Facebook page at Omaha EITC. All right, so the volunteer role for navigators, what they do, they are screeners, so they confirm your appointment with us. If you do not have an appointment, they do help usually fit you in or try and accommodate you or set up an appointment for you once you come in. They help with waiting room flow. They help you sign in. They help you with any documents that need to be scanned or make sure that you have all your documents available as well. And they do have other services that they offer in the waiting room. They can help with debit card openings or they conduct your screenings. They can help you with savings plans, coordinate credit reportings. We do have other organizations that help us with those as well. And they do financial education seminars or offer any services in the money menu. Our navigators will be trained in all of these roles during our trainings in January. This year, we do have our AmeriCorps RSVP volunteers. RSVP stands for Retired and Senior Volunteer Program. It is a program of the AmeriCorps seniors, and it is specifically designed for volunteers 55 and older. Some duties that are involved with the AmeriCorps RSVP volunteers is they do have leadership training opportunities. They assist with outreaches out in the community and help recruit newer volunteers. Most of them are volunteers with us during tax season with repair navigators and mentors. There are other opportunities that we will offer for them as well if one of those roles is not something that they would like to do. Oh, they do also have participation in our coalition meetings and our subcommittees.
Any questions for Liz? Thank you very much. And we do depend on all of our volunteers, and so our site navigators are not second-class volunteers or anything like that. They're all critical to the effective flow of the proper of the organization. So what else can we do? Well, we should have been acting long before now, but there's still time to act. You may want to reach out with your story, with your struggles, with your thoughts about the new tax law to our elected officials, many of whom are also resigning at the end of their terms. So it's also good practice to stay in good communication with our offices when talking to politicians who have this responsibility and made these determinations is in part to look what's common to us. It's not just about me and my sorry story. It is, this will help strengthen my community. This will divide my community. I'm concerned about these larger issues. But here's the really particular thing that's just sitting in my craw right now, that I'm not going to receive the child tax credit, or that isn't going to be available for my neighbor who really has wonderful children. So their contact information is also in the resources in the chat. And if anybody in person would like copies of that. We have them here in the office for you. The same is true in Iowa. There will be a number of changes. Senator Ernst is not going to seek reelection. Senator Grassley, bless his heart, is in his upper 90s. And Representative Feenstra, to here in the western part of this Iowa, is intending to run for one of the senatorial positions. However, they are still ready, willing, and able to hear your thoughts, story, concerns, and that's how change is made still. So we can all do our part to express our opinions on this, and as things go through this coming tax season. We do want to thank everybody for attending today's sessions. We'd especially like to recognize contributors to this presentation. Mark Munsterman, who is the relationship manager for the coalition, who always keeps us on track of what's in and what's out in terms of tax law and what is upcoming. We could not do this without his guidance. Nebraska Appleseed Center for Law and the Public Interest also has been a policy advocate here in our community. The Knoxville County VITA program had a very interesting presentation, which I have stolen generously from, as is the case in the nonprofit community where we all help each other. And information, some of which is available in the handouts and resources from the National Association of Tax Professionals, which is a trusted source of good information. Could not do it without all of us. And at the end of the day, VITA is a community program. And so we rely on each other. Our contact information is displayed on the screen available in the handouts, and we are more than willing to answer your questions. And again, we are open year round. So send us an email, make a phone call, come and see us and have a coffee. We're happy to look at your needs. Any final questions before I'll end the recording at this point? And again, for our online participants, we are grateful for your presence with us today as well. And have a great day.